There, there we go. Get a link. Let me drop it over here. There we go. So if you guys join that link, I'm going to stream live on YouTube for us. I'm going to go ahead and mute myself in Discord so that you don't hear an echo from me. You should all be able to unmute yourselves and ask any questions if you'd like, and it'll show up on the recording, that kind of thing. So, and I'll just repeat folks' questions if you want. If you don't want your voice to be in the recording, you can always type your questions in the general chat. I'll keep an eye over there. All right. And if you guys want, I'm going to share my screen just so that we can look at some charts and just review a few things, but obviously you don't need to log into YouTube. Well, actually, if I mute in Discord, I guess you have to log into YouTube for this whole discussion. So, yeah, definitely log into YouTube. I'm going to mute here and just talk over there so you guys don't get the echo from both. So, welcome family to a little session I thought I'd throw together. Little like group therapy session, little family session, just to go over this last week because it was definitely a pretty crazy week. A lot of things happened, and if you weren't ready and on your toes, you may not have caught much of the move or any of the move, or you might have been counter to the move. So I think real quick we'll just look at the chart to show, we had a shortened week. Tuesday wasn't pretty, kind of uneventful. It was a pop and then a drop, but we're still in the same range, right? And then going into Wednesday, it was basically straight down, right? We didn't even try to get going, didn't even come up to retest anything, we just dropped. And caught one bounce to VWAP and then dropped the rest of the day. And it was kind of the same if we look around at ES or anything else. We can take a quick look around, but I kind of wanted to just throw up QQQ just because I had one key level on this drawing set and kind of just wanted a fresh chart to just look back at the week and, even for myself, think of, well, man, this was quite an opportunity. We didn't quite catch all of it. And that does not mean we are bad traders. That's kind of the first place I want to start. I know some folks had decent weeks. I know some folks had great weeks. I know some folks had not so great weeks. I know some folks had maybe even potentially devastating weeks. And anytime that we have that kind of spread of success or range of success, I want to kind of go back to review. If you're a trader that does not normally do your own trade reviews, your own journaling, then I feel like these sessions are needed because we should be journaling and keeping doing trade reviews, keeping track of things. And if you've never written a trade review, that's understandable. Maybe you're new, and that's something that we'll talk about. We a number of us have a few different formats we like to use so that we can capture all of our mindset that went into that trade, managing the trade, giving ourselves a grade for the trade as far as thesis. Was it a good thesis? Execution, did I execute properly to my thesis? That kind of thing. I'd say the number one thing that gets in the way of all traders that are new, which I think accounts for most of us, is execution, right? We just like being a pilot, you need to have 10,000 hours before you're ready to fly commercially, right? So as a trader, you need to obviously we are going to have stumbling blocks as we try to execute what we want to do on the market. So don't be hard on yourself if it was a bad week. Um, this was a tough week for a lot of folks. You know, we have to crawl before we walk, yada yada yada. So I want to cover some key points, at least around trading, and then specifically around our system on how we can at least all have a set of rules, manage better as we move forward, as we enter trades together, right? Things can move pretty fast in the room, and there can be times where we have folks in calls and we have other folks in puts, and it almost seems like we're not in sync. And, same things happening on the market, frankly. Small money and big money are constantly repositioning, and sometimes we're even straddling and strangling so that we can still catch a piece of the move, even when we're uncertain exactly what that move is, right? So, excuse me, sorry. Let me catch a drink real quick. There we go. Sorry, as you know, I just record live. I'm not going to go back and edit, so. But yeah, we had kind of a crazy week. Frankly, this week could have been range bound had it not been for the news. The news sent us down, and then we rebound right back up. If you were to load something like the Daily Keltners, you might have seen, we were hovering in a range. We had that, sell off Thursday, Friday, set a bottom. Now we've got a range that we were going to be in all week, pretty much hovering around second and first ATR down, or Keltner down, right? The news hit, invasion started. They sell us off to and a little bit through the second Keltner. The overnight session did the rest of the work to get us down to the third Keltner. If you're new to Keltners at all, basically we usually only get as far as 3 ATR, 3 Keltners away from what is the mean, right? Whether it's upside or downside. So, going into this whole rebound that happened, we at least need to be ready mentally for the what if statement that is, well, we're at third Keltner down, which is where we usually bounce. What if we bounce? What am I going to do? A lot of times I do prep for you guys between 8 to 8:30, and I try to wrap it up there so that I can have a whole hour to myself to focus in on the exact names I want to trade for the day, the exact strikes I want to trade for the day, and then I go through a series of if this, then that kind of scenarios, right, in my head every single day. I have key levels, maybe key indicators like the Keltners or the squeeze clouds or any of the things that I've provided for you guys. And I use those to come up with if this, then that statements. If you've listened into my preps, they go like that most of the time. I throw on a number of key indicators I like to use, along with key levels. I see where we're at, I think about where we could be, and I say, well, if we can hold this bing bang boom, we can make our way up to blah blah blah. If we don't and we reject and we lose bing bang boom, we're gonna head down and yada yada. That's how every prep goes because I'm constantly thinking in every direction because none of us quite know the overarching pattern of what's going on or what's about to occur on the next day on the chart. But we can use what we have in front of us to come up with a thesis, right? We were downtrending on Thursday, Friday, and then Tuesday we popped through all that, but we get hung up at something. And I think even Tuesday we hit the upside and we hit the downside. And I don't even know, we might have hit the upside and the downside again. Yeah, I think Tuesday was that day that it was like each call out ended up being great. So, I come into each day with an if this then that. So like, I bring up Thursday and Friday because at the very least, we all should have had some upside idea of what we would do. How would we react to upside if that's the plan for the day? I know everyone sees the war and sees this overnight action and thinks, first pop and calm down and consolidation, I'm short. But that is not what we do if we, hold on one sec, let me just...
Hello, good afternoon.
Hey, King, can you hear me?
Yeah, I can hear you, Professor.
Hey, I threw a link to YouTube.
Okay,
You'll want to drop in there for the conversation.
okay.
I mute myself in Discord just so the folks that are in Discord don't get the double feedback echo kind of thing.
Oh, okay,
Yeah.
okay.
So
So
meeting's
just
already
check it.
started. Yeah, meeting's
Okay,
already started. Just click that YouTube link and you'll drop into our live.
okay. All right, I'll do that.
All right, cool. Sorry about that. Just wanted to help folks get over here. What was the point I was at? So yeah, I mean, going into Thursday, Friday, we have to think we're down so much, we have to plan for some upside, right? So I just go back to cover some of these things, just to remind ourselves, we need to be ready for both directions, even in times of a news catalyst like this invasion in Ukraine. The market can only move so far in one direction uh, before forces are going to step in, whether it be orders that are already out there, whether it be Greeks that start to hit extreme and enact algos. I mean, the majority of it is it's algos. There are tons of algos out there that are going to react once we get back to certain levels, once certain direction gets taken in too much momentum, yada yada. So I can say even for myself, on Tuesday I had puts, I wrote them down, I locked them up, but I don't think I re-entered, and I locked, early for the whole move. So there's definitely more I could have caught on the downside there. I'm sorry, I don't know if I said Tuesday, I meant Wednesday. Wednesday, that was the sell-off end of the news. Yeah, I definitely could have executed better, but it was still a green day, and I caught the direction and a good piece of the move, right? Didn't position myself to swing anything, and I, obviously could have. So Then come Thursday, I could have executed way better to the upside. I did catch some calls on pullbacks, but I did also load puts when we kind of started to top out at certain areas. Some of those puts, didn't quite get a double, but I locked some good percentages on them. And I didn't have, I didn't hold the calls all the way through the day type thing. I caught pieces here and there, scalping, right? So yeah, even I, who created this system and have a pretty strict set of rules to try to keep on top of all these moves, I did not capitalize as well as I wanted to, right? And but I can say, on Friday, I think we caught some puts first, and then we called out a bunch of calls, and it popped up and kept going. So, and that's a great question, Mike C. I am not one to, I'm not a spread guy, right? I am a naked trader first and foremost. Spreads will be a part of my game when it's time. And frankly, I have a whole system ready to go for spreads when the time is right for me. And it actually all works off Beast as well. Um, and just a quick aside there, what's been released so far with Beast is the key level, the key Beast zone that we should look at. That's what's provided me such success since I've created the system. Then we started to introduce the burger, which is that zone that gets plotted intraday based off Beast. There are more and more pieces to this system that will start to show themselves. We will start to release them. Basically, they're not all provided at once because it's a lot of information, and in a way, sometimes it can be, we're already looking at calls and puts, which maybe not be natural for most of you guys when you start to think of countering your trade constantly, right? But that's how these algos are operating. But yeah, I mean, that's basically why we haven't given every little bit of the Beast system yet, because it's good to kind of introduce yourself, then start to get up to the next level. But I can say every trade that you're going to hear me take for at least the next 6 months is all going to be naked. There will be a time where I start talking about spreads, and it will be driven off of this Beast system. We are working on that and fleshing that out to get it cleaner and cleaner, just so that the spreads are super easy and safe, right? So basically, like, we have a lot of signals that we can get with Beast, and we get some really interesting ones with spreads to where they kind of just work each time the same way. So that is coming, definitely. And yeah, Mike C, there will probably be a spread room section in our server in the not too distant future. I say 6 months for me. It could be a lot sooner. We do have some guys in here that are experts at spreads. Papa, CG does spreads from time to time. A few other guys in here, but so yeah, that's a good question. Yeah, everything I'll be covering will be naked options. So I have a kind of a list of points and topics that are worth covering today. We'll look at some options charts here in a little bit to not necessarily look at what we missed, but more so look at signals and different setups that happen with the Beast. If you weren't in chat on Friday, I talked about a playbook that I'm going to be releasing to everybody very soon. It's not quite ready today, just because I want to encompass everything I can in there. But it will be a kind of a nice slide deck of these are the different patterns that we see when it comes to how options interact with Beast. this can be the way it plays out on any one of these strikes once the day starts, right? There's instances in the morning, right when we open, where we're in Beast, and we see a very strong reaction off of Beast, and that option runs all day. If we look at the puts for Wednesday, that was very much the case. We opened at or near Beast and kind of took off from there. And funny enough, if we go look at the calls on Thursday, everything was closed up above, even with the sell-off that we had. But the gap down landed a ton of calls directly in their Beast zone. And they got bought right up, doubled basically in the first 15 minutes, and then took off from there. So basically, going back to the playbook, I'm working on that, and we'll most likely get it out tomorrow or Tuesday at the latest. But it will basically be a slide deck of different examples to show that there are different setups when it comes to Beast, understanding the time of day, understanding what's going on with the stock. A lot of different things can help us identify, oh, it's this kind of Beast play, I should expect this, or I'm willing to take this much drawdown because it's this kind of a Beast play versus, something that I expect should start to get going almost the moment I get in, right? So that is definitely coming. And it kind of brings me to my first point when it comes to our system with the Beast zones. The Beast provides ideal entries, and it provides a gauge for us to measure the algos, but we can say investors' intent, right? When we take entry at Beast zones, it should be what is, very close to or considered by a lot of folks as fair value. That is not necessarily what the Beast is calculating, but when we land in Beast zone, that means a lot of premium that used to be inflated into this option for any number of reasons has been taken out, and we have arrived at a very key level as far as the calculations that go into these algos, right? So we should see a reaction. And it should be a reversal on the options chart. Whether we're playing calls or puts, we're wanting to get in low and sell high, right? The point of the Beast zone is it should be, if not the lowest, one of very close to the lowest point to where that's going to reverse. Now, obviously, prices go under the Beast zone, right? And how do we react to that? That's also something that we'll include in the playbook, and this playbook will be given to everybody for free. It's part of it's a subscription and everything. There are times where we're under Beast zone, and I'll actually play it up to Beast zone and then lock up, and I'm done with the trade. There are times where I'm in a trade at Beast, and once it goes under, I'm out, and I don't even look back at the trade, because there are times when we need to understand when we lose Beast zone, that option's no longer viable. They did not buy it at the designated spot where they should, so there's something else in play. For instance, when the sell-off started on Wednesday, there were calls that hit Beast during that drop, and they might have popped for a second, but then they tore right through their Beast. Those calls are no longer viable. So we shouldn't be trying to catch a falling knife. We should be watching for a pull up to load into puts, right? The Beast zone gives us what should be the most ideal entry, or as close to it as possible. I will say when I take an entry at the top of Beast, I'm always understanding that it is the top of Beast. This is a zone, sometimes due to momentum. Sorry, I see some questions rolling in. I'm just showing right now QQQ and kind of talking to the week. I'm not showing anything on options yet, but we can start to dive into some. We can look at like the 335 put to start with downside. We can look, at the 330 to upside. So let me, I think I have options right down here. Yep. QQQ 2202. What was that? 23rd. Put 335. There we go. Hello. What are we doing? Toss. Thank you. Turn that off. There we go. No, the screen's not frozen. I was just kind of talking off of my notes more than showing examples. So yeah, let's see. The entries that we get off of Beast should be great and provide some awesome return. And there are times where I take entry at the top of Beast and I understand and I reason with myself, I'm okay if it drops to bottom Beast. In this instance, when we have Burger below that, I'm okay if it drops to Burger. I took entry at Beast, it bounces at Beast a lot, but there are times of overswing, and that's totally fine. So, the point I'm trying to make here when I bring this up is another point I mean to make later, actually. The point being, we shouldn't add to our losers willy-nilly. We shouldn't add to a losing position because we've reasoned with ourselves that there's a point where it hit and it should pop from. I use the Beast Zone to tell me about, if there's a reason to do that, to add to a position when I'm in the red on that position. So if I take entry at the Beast and it drops through, but it holds the bottom, I'll add near the bottom in an attempt to just bring my average price closer to the bottom or even halfway. I only add enough, maybe the same size I went in with or one extra kind of thing to bring that price lower. If it were to fall through, I'm out and I had a measured risk, depending on what those levels were, right? If it holds and takes off out of Beast, by the time it's getting out of Beast, I'm already green because I've brought my average down. But I do not add to a loser as it hits Beast and loses it, hits bottom and loses it, hits Burger and loses it. I'm not adding. I also don't add every time I buy at Beast. It drops to bottom, settles, and starts to go. There's plenty of times I say, well, I'm in at Beast, whatever. We're back above Beast, awesome. Oh, we're bouncing again, great. So I'm mixing up the points I'm trying to make. Let me get back to the main one. The main one being, our entries are in a very tight zone usually, and should provide us a very tight risk for a reward that is better than that risk. We get great entries and it should provide some return, and I emphasize some because I know with Beast we see doubles, triples all the time. But we need to be, at least cognizant of these levels are calculated for a reason. So let's say you get in at bottom Beast, it gets up to the patty, you are basically at a double, but you didn't lock anything and now it's right back at beast. Well, that is why we try to teach to take off some as it goes up. Don't hold out because we're trying to catch bottom and we're right at where it should. Don't always hold your core size to try to get to the top. This is a great example of, let's say you see this happen, you get in for 50 cents or something, it gets up to $2 you didn't lock, and it's back at 50 cents. That's not going to feel good. You know, you're going to put extra stress on yourself because of this, because of not locking as it got up to something and you've captured something, right? Then as it comes back, even though you're not red, the stress is going to start to build. And you're going to say, I need this to work. You know, I just missed capturing a great return from 50 cents to $2. That's 4x. And if you didn't lock anything there and it's coming all the way back and you're not locking, it's going to get stressful. You're going to put stress on yourself, right? That's why we preach, you know, you get in here, you're on a trajectory, start locking up, leave paid runners. If you caught a 4x and leave one or two of them or whatever, you don't care. Even if it goes red for a little, you don't care. And when you see it not go red and it's back to green, you know, or you know, it's pumping right back up, you're like, yes, okay, paid runner served its purpose. And yes, you can re-add, you know, there's plenty of times where I catch something like this, $1 to $2, it comes back to $1, I'll add a couple more. When we get back to $2, I lock up the ones I added, right? Like I added a couple more just to allow those runners that I'm going to leave to run. You know, there's been plenty of times in my past where I tried to be the guy that got in here with 5 and got out here with 5. And I hit plenty of them, but that is no way to trade that is going to be sustainable and consistent. You get in, you lock, you know, then you manage. I did get messages from a few folks this week that didn't have a good week, and some of the feedback was, you know, I was in the trade and it was going good and I was up this much and then it fell, and always my key reaction is, well, why didn't you lock some? And there's always a rationale, right? This is what we do to ourselves that keeps us from moving on to the next level of trading. So I won't beat up the point. Last point I wanted to make on this first kind of topic was when the price falls below the beast zone, for me, that's saying the algos, the investors, whatever you want to think of it as, they don't intend to take it to that strike. They don't intend to make that move in the time allotted. We're playing options, they all have expiration. This is a time-based movement game. So if this 335 put fell through beast and stayed below beast and didn't bounce at something like a burger bottom, which sometimes is below beast, right? Then I'm out of it because it tells me that they don't intend to take it there. You know, let's go look at the same day at the 342 call, right? Or I'm right. 342 call is what I meant to do. We don't have the missed data there. Let's go to the 40. Okay, here we go. Here's the 40, right? We bounced at it the previous day, we closed at it. This is something we might have even swung, and it worked, right? And we lock up, just like a lot of folks did. Now it's back at beast, but it falls right through the first, it falls right through the second, comes for a test. You could say, okay, I'll get in here at $1 at this test. The second it's below that buck, it goes to 50 cents. You should be out, right? You know, it's the burger bottom, it's there to support. we fell through so hard, we fell through so hard, let's read this, we're rejecting, we're heading lower, we're rejecting. I'm looking at 5-minute candles, but this is not looking like the bounce, right? Like the last chart we just looked at, where it spent like a candle or two and then it was gone, right? This is, we're here, we're basing for a second, now we're here, we're basing for a second, now we're here. This is the march of death for an option. We should see at these levels key reaction. Boom, and algos and investors were sitting in wait, right? It drops, 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 drops. Boom, here they are, Here they were again, boom. So we need to be able to read these key signs and understand, on the option itself. And yes, this relates to the equity, but we are options traders. There's stuff going on here, and we need to pay attention to it, right? And when we have an interaction like this at Beast, basically from about this point, from 10:20, it's dead to me. It fell right through, rejects, falling through, rejects. Basically by 10:40 at the latest, I'm done. This is dead to me. We're going down, right? Let me hit a couple of these questions before I move on to the next topic. Okay, this is a great question about size and scaling. Let me just look through my... Okay, no, this wasn't in my notes. So thank you for asking this, because it should have been in my notes. So I'll cover this topic now. Yes, this is a great question. Let me cover it and read it. I have spent some time talking about position sizing and how all positions are the same size for me, assumed from the same dollar perspective. One, are your most successful trades one where you can scale in and out and let runners run? If yes, is it best that we all mostly focus on something like SPY and QQQ since they're less expensive, and for say 500 position, it gives you the ability to purchase multiple contracts. If you're in a Tesla, it might be one. Yeah, these are great points. So when we talk about size and scaling, there are some key things that I try to preach and that have helped some traders that we all know and love. Number one, when I go into any trade, I try to size them up all the same. I am looking, I'll just try to throw out numbers that are relative to everybody so that we don't get confused or anything. So let's just say, typically you're looking for an entry between $1 to $2. I know some of us trade Tesla and other things that, we're not catching contracts at least early in the week at $1 to $2. But if we're talking like SPY and QQQ, you're probably trying to enter around $1 to $2. So as I'm looking at any trade, I'm looking in that range, let's say, I'm going to go in the same size every time. I'm not going to try to treat it myself personally like I know what's best. And so I'm not going to look at any one trade and say, oh, this is juicy, this is going to run all day, I'm doing this. Because that is me trying to inject my bias into the setup. I say this because it's come to bite me in the past, and it will any trader, right? This is a game of numbers. We're going to take trades every day that can be right, wrong, one way or the other, right? These algos and these investors, it's a game of numbers to them. They are playing the same game, right? And they don't mind repositioning 30 times in a day. And so we need to be prepared for all scenarios, right? So I size into everything the same. That's kind of my rule. If I'm going into a $1 to $2 entry, I might buy 5, I might buy 10. It kind of depends on the day. It might even depend on how my week went last week or whatever, right? Maybe if I had a losing day or two in a row, let's step it down a little bit. Let's start sizing down, not sizing up to revenge trade and get it back fast, right? Because this is just a numbers game. And at least the point of this system is to get you in at a great entry with a measured small risk, so that your losses should be small and your gains should they should outweigh your losses. So on sizing, even on this trade, I'm looking at something that's 30 to 50 cents entry. We landed there at the morning, right? If it's 30 to 50 cents, I can maybe afford 10 of those, right? And that gets me a little above my $1 to $2 that I would have spent, let's say, on a trade. But that's not a ton of money, right? I might get 10 of something for 30 to 50 cents. If it's under $1, I'm probably going to pick up 10 of them. That's just me, but everyone has their own size that they should play to, right? Pick up one of them, pick up 5 of them, whatever. So just looking at this trade, for example, I'm going to pick up 10 of these at 3 to 50 cents, right? 0.3 to 0.5. And then, by the time it gets up to $2, I'm at 2,000 from a $500 entry, right? 4x. And yes, size in and size out. That is something I love to preach. That's why you'll hear me say all the time, we are at Beast, I'm taking a feeler. That means I'm throwing one contract on at Beast. If it bounces here, I'm in the move. But I'm not quite confident yet. We could get to bottom Beast, so I'm throwing on a feeler. When we get down to bottom Beast, I'm watching carefully for confirmation that we're going to hold it, that algos are buying, that volume's stepping in, that it doesn't have to be a crazy volume spike, but just there's action going on at that key level. We want it to react, we want it to reverse, and we should know what reversals look like if we've spent enough time trading and understand price action, right? So I might get in at the top Beast with a feeler. When it gets to bottom Beast and I see confirmation of a hold, I'm going to go in with maybe more size, because now I'm going in with my core. I started with a feeler, now I'm going in with the core size I would normally go in on that trade. So like, for instance, on this pullback, I'm looking specifically on this pullback where we're back at Beast. Let's say you missed the morning and we're all the way back at Beast. I might pick one up there, and as we drop down here and I see this doji on a 3-minute and we start pushing green, I might buy 10 right there, right? Overall average, it's pennies, I'm in this range right here around this doji, right? And then I'm off and running. I size in, right? I don't say, oh, we're tapping Beast, I'm buying 10. I have done that in the past. That's not how you trade, in my opinion. You don't go in with your max size on the first price you like. I personally like to size in, maybe in these instances where we're right in Beast, we're wicking down, we're wicking up, okay, I'm going to start sizing in heavy here, and it should bounce. If it doesn't, I'm out. And I have my exact key area to risk off of. It's a 20 cents little area. Depending on where you get it, once it gives out, you may be losing 10 cents, whatever. So I size in. I might add one, I might add a couple, and then when I see us hold and I'm getting confirmation, boom, 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 I'm adding a little more, right? I've sized in. I'm going to size out the same way, and that's the whole point of all of these levels. If you catch it at bottom burger and bottom Beast, You should lock some at the patty. You should lock some at the burger top. You should lock some at a previous high. As it pushes through, look left. This was a previous point of rejection. This was the previous burger bun. And we run into it, we set high or low, we run into it, high or low, we're coiling, we're wedging, boom, we're off and running, lock at the next high. So I'm sizing out just like I size in. I have known too many traders that say, well, I took 10 of them at this price, and I'm just like, well, did you buy all of them at $1? Like look at this pullback. Pull back to the patty, start to bounce. If you went 10 deep at $1 and it gets to 50 cents, you're looking at being down $500, right? You're down 50%. You're going to be really sweating it. And instead, you should be buying one at $1 and then buying one here and maybe one here. Again, I don't really preach adding to losers. But I do say, if you get a key reaction at these levels, risk off them, right? So if I would have added at $1 here, because I think it's going to take off, normally I don't. This close to the beast, I'll just wait for the beast, right? But let's say you added at $1 here, and it's falling. Now I'm going to wait for something else that should be the last line in the sand, like the burger bottom and this lower beast overlapping each other, right? So anyway, those are great questions. Yes, I will size into everything the same way. And yeah, that's why we try to call out SPY and QQQ every day. They are a lower entry price. They provide more stable trades, right? But there are the Teslas out there and the Amazons. And in those cases, if I'm trading a bigger name and I'm putting on a contract of more cost, I'm going to go less size, right? Like if I'm getting into Tesla for 500 or for $5 on an entry, I mean, I can afford 10 of them, but I'm not going to do it. I'm going to size down. So that overall, let's say I got into a normal contract for $1 and I get 10 of them, I'm spending $1,000. Now I'm getting into this Tesla trade for 500 on the entry. I'll get 2 of them and spend $1,000. So that overall, my size is going to be the same as if I'd done this trade over somewhere else, right? That's how I treat when the prices are different or the prices are higher. I'm not going to go in and grab the same quantity. I'm going to change the quantity to try to get around the same price. What I aim at right now in my journey is I'll throw $1,000 at this, I'll throw $1,000 at that, because a double here and a triple there, that shit adds up fast, right? If I'm not confident about the trade, if I'm not that confident about it, but I still think it's potentially viable, I'm going to size way down, right? If I didn't prep well on the day, if I cut myself short on time and I'm not prepared, I'm going to be sizing down. If it's a Friday and everything's expiring, I'm sizing down, right? So scale, sizing should be something that you come up with rules that work for your portfolio. And it should be rules that allow you to treat every trade the same way so that no one trade really hurts, right? I have had the feedback from some of you guys where it's like, this one really stings. I'm going to have to take a week off, blah, blah, blah. So sizing is one of the biggest points I can make to you guys, that treat everything the same way and every loss is going to feel the same way, no matter what, as long as you're managing properly. And as long as you're planning, right? We should have a plan. When we enter a trade, we should have a plan. If it gives up this level, I'm out. And if you don't stick to your plan and you don't stick to your rules and you just watch it go against you, you're kind of like that deer in headlights where you're not reacting the way you should. The algos are going to react and they're not going to think about it. And that's what, sorry to say it, that's what I'm training every one of you to do. Become an algo. Take out the emotion, react to what's in front of you, right? And that will bring us perfectly into our next point, but let me hit another couple of these questions. How reliant are you on tape? Are you mostly relying just on the indicators and studies? No, I read tape. I read tape around key levels. So if my thesis of the day is I think we're going to take profit at open, we're going to drop a little bit. I want to see us hold this key level, and then I want to see us bounce. If that starts to unfold and we go to test that level, I'll have the tape up so I can watch and understand what's going on there. Is size stepping in? Are they going to defend this? Are they going to give it out? But usually by the time I'm seeing it on the tape, that they're defending, they're defending, and then I start to see the candle move. It's like, I'm ready to go. So yeah, I still look at the tape. Not all the time, basically when it needs to be looked at. An interesting comment you made last week was reading the descriptive terms and then anticipating what the algo machine traders should be doing. Yeah, I mean, at least I'm always trying to think, or at least I'm with my tools and the math and the calculations I'm doing, I'm trying to understand what are the big fish doing, what are the market makers doing, how can I get earlier and earlier indication to know when the sentiment has changed for them. I mean, there's a lot of retail traders out there, but they're not moving the market. The algos, big money, market makers are moving the market. So I'm trying to dial as far back, against what they're doing to figure it out. That's part of what Beast is. Why does it bounce at Beast? Because it's supposed to, if we're going to make that move in that given time, right? Let's see. Same situation with Tesla. I'm now focusing on SPY. Yep. And yes, all these pearls will be in the books to come. I do need to sit down and just write a book. And here we go. Herb's helping us. He's taking some great notes and putting them in the chat for us. So yeah, I said that brings me into my next point, which is no bias. And this isn't a long point, it's something we preach every day. We have to not be biased. We have to come in not ready to do not wanting to do anything other than react to what's going to unfold in front of us. I know a lot of folks on Twitter were like, oh, we're going down, oh, war, short everything to the ground. And then I'm sure a lot of those folks on Twitter got very, very quiet Thursday and Friday because they came in with a bias to say, we're at war, everything's going to go crazy now, the market will sell off, this is COVID 2.0. That's bias. I mean, there's even times in coding where I try to be cognizant that I'm not putting bias into what an indicator's telling me. Like, it's kind of even maybe hard for you folks to grasp, but you'll code, you'll get these results, and then I have to stop and say to myself, is this going to introduce bias in my interpretation of what I'm seeing in price action? Have I coded bias in? That's how That's how much I think about bias, right? So I can't stress it enough to you guys, and I tried to make the point a couple of times this week that I never want to short or go long. It's never a want. It is just what I will do when my if this then that statement unfolds. Frankly, I hope everything, rebounds nicely, and I hope we get back into a bull market because that's fun and a little easier for everybody to read, right? But market doesn't care what I want, and so I'm not going to bring my want to the table ever, right? If I want to be successful, I have to leave want behind, and I just have to react and execute appropriately. Next point, and I've kind of covered it. It's about don't add to losers, right? I will add at beast. I will only add at bottom beast. Past that, I'm out, right? We shouldn't, with the system, we shouldn't sit through very much long drawdown. It should almost be timed, right? If we get in at beast, let's say before noon, as it was in both of these cases, right? We should be green from that point on. If we get in before noon and we have been sitting in red for an extended time, then we misread something and took the wrong trade, frankly, right? Or it's just not ready yet, or blah, blah, blah. Basically, like, I find using Beast, when I am sitting in drawdown for an extended amount of time, it is by design because I am taking a Beast entry late in the day, and I probably read something and thought, all right, this is a good entry, and then it dipped a little lower, but still stayed in Beast or near Beast or whatever. We have seen these instances where it drops to Beast later in the day, and they keep it there all the way into close, and then we see a nice gap, right? Those are the instances where I might have gotten into a trade and sat through being red for an extended amount of time. And that's okay with me. It's a swing play. I accept 0 on any swing play in this crazy market, right? But, and you'll see this more in the playbook as I put that together and get that out. You're going to see examples of, like this one we're looking at. This is when you attack directly in the morning because it lands in Beast. It's right at Beast. This is the time to react. Go, go, go. And then you'll see other trades where it drifts slowly and midday it taps Beast and then it takes off. And then you'll see some where it comes down and it just settles into Beast and then you get a gap up. So that'll be, in the playbook. But I only use that as an example to say the whole point of Beast is it should be the point where things get turned on and turned off, right? So with most of these trades that we try to call out, it should kind of be, oh, okay, we're looking good. Oh, okay, looking better, better, better. And if it's not, I'm usually out. I'll say, oh, it's going good. I'm up 30, I'm up 50, I lock some. Okay, it's going back. Okay, it's at my entry, and I'm out. So yeah. I try to say don't add to losers, and then I go and tell you how I add to losers, but I do it in a very measured sense, working directly off these levels, and it only works as long as it moves. If it doesn't and it falls, that's my line in the sand. I've kept my risk very tight, right? And I can always re-enter. Why sit through hours of drawdown? If that move does end up happening, you can re-enter. If you caught all of this and then it starts coming back and you think, oh, okay, it'll hold this burger top. Oh, it slipped a little. Okay, yeah, it's holding burger top. Now it's rejecting and going down. Cut it and then get back in. Or if you already locked some winners, you're okay with letting it go back down here where you might add, that kind of thing. Let's see. Next point. Sometime the direction for the day has been set, right? Let's go back to QQQ. We had a couple of days where that was the case. The direction is set, and we either need to get in line with that direction or not trade. In these instances, we shouldn't try to fight the trend. We shouldn't try to counter trend. Now, I know in this system, with the beast levels, we see these instances right here, like on Tuesday. We hit some beasts in the morning, we play those up. We're hitting a key level and we're rejecting, and puts are at beast, so we change directions. We got to another key level and other calls are back at beast, we change directions. That's just us reading the flow and being in the flow, right? But sometimes when we think, okay, we're at a key point and calls are blah, 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 we're looking good on calls now, oh, we rejected. We need to, take stock in what's going on. What are we rejecting? Something like VWAP, that's one of your big main keys on the day, right? Especially when the trend already started and now it's trying to fight back. VWAP's usually the line in the sand. And a key rejection there, if you caught this and are going long, that's your oh shit moment. Lock everything up and start going short, right? Or if you miss the drop, you miss the direction, and you don't want to play the bounce, and you're waiting for your short, that's where you do it, right? So, main point I wanted to hit here at least is sometimes we miss our entry and we miss our direction. Let's look at this specific example. We start the day around 340, 342, whatever. We drop, what is that? 6, 7 points, almost 8, something like that. As we fight back up, we're only at 337, so we're about 4 points lower than where we open. 4 points lower. But if we go look at that option, it came all the way back to beast, and it was only about 20 cents off, or about halfway from this down to this original entry, right? If it's 25 cents, let's say, and it's 50 cents, it came all the way back to within that little 25-cent gap, and then it took off again, even though QQQ was 4 points lower. So there's interesting stuff that's going to happen on an options chart, and just because you missed the entry you wanted doesn't mean you're not going to get it again. And if you caught the calls, you should be watching this put as your gauge, all right? That's why we preach to watch calls and puts, use them as gauges with this system. If you missed the puts in the morning and then you caught calls and puts are losing value and now you're in, one of the waves, be ready for the change of direction. And just because you missed your original entry, be ready, it might come back. Instead of fighting the trend, right? Let's say you caught the calls and you locked some up and now it's coming back on you and you didn't pick up puts, and so now you start loading up on calls again. Well, if we're down once and then we're down again and we reject VWAP, going back to the other chart, I know I'm talking to one, but talking about the other, we need to read the signs. We need to understand the overall trend on the day and try to not fight it, right? Let's see. Yeah, basically you don't want to buy calls the whole way down. You don't want to short the whole way up. And if you find you're in that situation, there are times where if I am not in the same flow as the market and I don't feel at sync, I just close it down. I say, today's losses are today's losses. I'm not going to fight them back because I'm not in sync with the market today. I do this with futures all the time. I'll get in, I'll be trading late at night or in the early morning and I'll be hitting futures. Most of the time I feel very in sync and I feel like a surfer and I just caught this wave and then I changed, now I'm on that wave and I feel good, but there are days where I show up and it's like, oh, here's a couple of wins. Ooh, that was a hard loss. Okay, a couple of wins and and I've had days where I'm positive 500, negative 500, positive 400, negative 300, and I'm just like oscillating around zero. The next time I get up to like 1 or 200 positive, I shut the whole futures platform down and I say I'm not touching it again until the next futures day starts. Because for me, right now, I am not in sync. And the more I try to fight and push myself to be in sync, I'm going to lose. And these losses are going to outweigh the wins, and I'm going to revenge trade. And, I know how I operate, so I know what I need to do. So I definitely suggest to everybody, in your journaling and your trade review and whatnot, do some introspection to say, what kind of trader am I? What works for me? What doesn't? I've heard some folks say, I can't trade the first 15 minutes because I always mess it up. That's a rule, and that's a fine rule to have. I will say there's a lot of opportunity in the first 15 minutes. I used to have that rule myself. I've cut that rule out, and I still hit trades at open because I have rules in place around beasts and I have rules around my risk and yada yada yada. So if I jump into something, since there is so much momentum going on at open, I'll know very fast if I'm wrong and I'll cut it, or I'll know very fast if I'm right and I'll hit that trade, right? So personally, that for me, that's a rule I used to have of don't trade the first 15, don't trade the first 30. Nah, I've done enough and I've learned enough and built this system that helps me identify swing trades and gaps and yada yada, so that at open I usually feel pretty close to doing something and it usually works very well. So anyway. Next point. We need to be okay with missing a trade. If you aren't prepped or ready, that's kind of on you, right? We output data and preps and everything to try and help you be ready. You still have to do your prep. Even though I do prep before I prep myself early morning, then I prep for you guys, then I prep again before market open. So I've done hours worth of prep, multiple different versions of them to get myself ready for the day. There's times at night I'm prepping. I try to be so prepared for the day that when something starts to happen, I'm like, oh yeah, I thought about that scenario, here it is. But there are days I show up and I don't hit the trade that I planned to hit. And I'm okay with that. With this system, I know that there's just opportunity everywhere, and so I'm okay missing a trade. There are times some of my fellow traders in the room call out a trade, and I'm like, yeah, I see it. There's a thesis there. I'm not going to hit it. It's just, it doesn't look right to me. And that's because I've become very good at being okay with missing trades. That might seem like a silly point, and you're like, yeah, move on. But sometimes that gets to us to where we miss, the initial move. We miss this short on the day. And so we're hunting and we're starting to get too aggressive and we're doing maybe dumb things. Instead, I miss the trade. I say, okay, I missed that trade. So I start hunting around or whatever. And then I see, oh, the put's right back at beast and we're way lower. Oh, okay. Yeah, I And I think JC's talked about this. I have successfully, at least in my own trading psychology, been able to convert all FOMO into JOMO. And this system helps a ton because I can pull up that trade. I can say, yes, I missed that trade. It's already taken off from where I would enter, and so I'm not touching it right now. I'll watch it, and if there's a pullback and it hits one of the key levels I do want to risk off of, and it makes sense, then I'll get into it. And maybe I didn't get the original best entry, but I do have my system, my gauge, my burger, my everything, right? Let's say you miss this entry, it hits Patty and it pulls back and almost taps Beast. So it goes from 30 cents to a buck, but now it's back at 50, or well, what is it here? 75 cents. I'm gonna get in at 75 cents. I missed 40 cents. It goes from 75 cents to $2. You're gonna be happy, right? You didn't catch the whole thing, but you saw that you missed the entry you wanted. You waited, you gauged, you waited for a key thing to reject and pull back and hit another key thing. And you know that getting in there is a risk against XYZ of what you would have originally entered at, right? So it's okay to miss the trade and then watch the trade and get the trade and still capture a nice piece, right? So if you aren't prepped, that's something you should recognize. There are days where I come up or I show up, I get all the data out for you guys, I do a prep for you guys, I get phone calls or whatever that distracts me in that hour I try to set aside for myself, or maybe I'm running late and I run late on prep and I only have 20 minutes to get myself ready. I will recognize that and I will maybe not take a trade right away because I need to prepare myself. And I'll be calling stuff out for you guys. And if I go quiet for a second, it's because I'm pulling charts up and I'm trying to get dialed in, zoned in, and I'm not ready for a trade yet, so I'm not going to take one yet. Even if I hear someone call something out, that's me, right? So I'm going to try to steer you in the same direction. Show up, be ready, be prepped. If you're not, be comfortable with waiting till you are, right? We don't always need to be trading. Instead, we need to be hunting for the trade, waiting for that key level, for confirmation, waiting for Beast, right? Next point, be okay with cutting a trade, right? With Beast, you could almost kind of treat every trade as it should start to pay from this point forward. And you could even enact a break-even stop, and you could even enact a time-based delay on it to say, all right, I've entered here at Beast. This should go in my favor from this point forward. If within 5 minutes I'm red and it shouldn't be going lower, I'm out, right? Or if I'm sitting here and it's just bouncing around Beast for a number of candles, let's say, okay, I'm going to give this 45 minutes. I entered at 12:25, 12:25-ish. Let's just say I'll give it a half hour. So by 1 o'clock, this should get moving, right? If it's sitting here at 1 o'clock and it's just hanging in Beast, I'm going to start to be thinking about cutting that, right? I know you're thinking, well, it's just sitting in Beast, right? Why not let it just sit in Beast? Well, it's because things need to react here, right? And if they're not, holding is nice, and that sets up a different kind of trade, more like a swing trade or something like that. But I think with this system, there should be plenty of times where it's like, oh, okay, we just tapped Beast, I'm getting in, it should be taking off, and we're good. If that's not the case, I'm ready to cut. Almost the second I'm in the trade, I'm thinking of reasons why I need to cut it, right? The second I enter the trade, I'm looking at puts, or I'm looking at the opposite direction, and I'm thinking, okay, where's the entry here? Where is this going to have an entry that's going to affect my um, auction. Um, so yeah, I'm constantly weighing what's going to make me cut this, what's going to be the signal that tells me this isn't the right trade, even if I'm in it, that kind of thing. So be okay cutting it. And yeah, you could even almost enact a break-even stop, right? And you could say, well, what if it comes back and hits your break-even stop and then it takes off? Well, I am kind of talking mental stop, right? I got in for 50 cents. When it comes back to 50 cents, I'm going to be watching it. If it dives to 40 cents, but within that candle wicks right back up to 50 cents, I'm not going to freak out, right? Um, and I should see it bounce, right? So, I'm probably not even saying anything you guys aren't already aware of, but I'm just kind of talking through. Um, with this system, you could kind of enact a break-even stop loss once it gets going. Um, and I've kind of already talked how I size into things. So there's plenty of times where I size into the beast zone, top, bottom, and I've got a good position. Basically, if it drops out, I'm out. You know, even if it goes a wick lower, I'll drop it, and if it comes back up, then I'll pick it up again, right? Because I'm keeping my loss risk tight, and I can always re-enter a trade. Let's see. And on that topic of loss, it brings us to the next point to make. As a day trader trading every single day, you should probably have a number in your head that is a daily max loss number that you are comfortable with, right? Um, it should, it's going to be different for everybody depending on your portfolio size, your account size, the size of the trades you normally take, all of that. But let's just say you have 1,000 in your account. I'll try to make it relative to everybody. Let's say you have 1,000 in your account, and we're hunting for trades that are usually $1. You have 10 shots on the day, right? I can't stress enough that just because you have 10 shots on the day, that doesn't mean that every shot has to work out, right? You need to be prepared to say, shot 1 didn't work, okay. Shot 2 worked a little bit, okay, But you have 10 shots on the day, 10 trades, 10 opportunities at $1, right? Let's say you're just going one contract a piece, right? You need to have a daily max loss that you're comfortable with. If it's $1,000 account, maybe you say, I don't want to lose more than $200 today, right? So that means on your second loss, if you let it go to 0, you'd be done for the day. I can't stress enough that that is a good rule to have, because if that's how you started the day and you're down 200 and you only have 800 left, and if you take any more trades today, it's going to affect your ability to trade tomorrow if they're not winners, right? You need to be okay with the idea of saying, I'm cutting myself off for the day, I'm not in the right flow, I took these 2 that looked right, everything lined up, it was at beast, but it was a loser. You need to be comfortable with not trading, you need to be comfortable with the loss, and you need to have a daily loss limit that once you hit it, maybe you are done for the day. I think every trader in here can tell you plenty of examples where they started the day with a loss, they went back to try to, it pissed them off, they got mad, and they went back to revenge trade, and it was a much bigger loss on the day. Now that's not to say, if your first trade is a loss, walk the hell away, you're a bad trader. That's not what I'm saying. For one, I'm never going to say you're a bad trader. For me personally, since I try to be robotic about this shit, one loss each loss is the same as the next. I'm not gonna get um, upset, but I am going to at least start running statistics in my head to say this loss, that loss, am I in sync? And I'm going to try to identify maybe I'm not in sync and I'm going to take a step back, right? Um, so yeah, you need to be able to define what you're okay losing in a day that's not going to affect you the next day. Um, let's say you make $1,000 profit and you do it for a few days in a row, right? So you're up like 3K on the week. And then the next day you lose 500 on the day. Your setback was so much smaller than your profit, right? You're up 3 grand and you went down 5. That's a 1/6 of your account size, right? Of what you've taken it up to. Net net, you are 2,500 positive on the week, right? So that $500 loss, don't let it weigh more than the win of 2,500 on the week, right? Don't fixate on the loss and say, I've got to get back 500 on Friday so that I'm back to 3 grand on the week. I have to, this is when we try to push ourselves and say, I have to make 500 today. You're going to start to make mistakes. You're going to start to stress yourself more than you need to. And if you'd have just shown up and said, I'm going to do my best today, I don't care what I make. Shit, you probably will make 2 grand and totally recover your loss and then some and have a great week, right? A lot of the stress that we deal with is self-inflicted in this game, and the more that we can recognize it and just have a plan around it, the better off we're going to be. So having a daily loss limit is good. They have it in Top Step if you sign up for Top Step, daily max loss, weekly max loss. And they do that, 1, because they're trying to protect their capital, but 2, because that's what good traders should be doing. And they're trying to teach you discipline because they want you to be good traders and go make money for them and Top Step, right? So, and yeah, Herb makes a great point. If you're winning, if you're on the win side, you should have the same kind of defined parameters on what's your goal? What are you trying to accomplish? What should you be locking up at? A single, a double, a triple, home run? As we like to teach around here, stack those small wins, stack those base hits by locking your contracts on the way up and leaving paid runners, right? If you get, let's say you get 5 of these contracts, if you're locking on the way up, it's like putting a man on each base, and then, that paid runner is Babe Ruth coming in and clearing the field, right? I guess that does maybe not the best analogy because when you've locked up, you're out. But if you have those paid runners out there, when it does go to a home run status, there's so little stress going on, and you're just going to let it run, and you're going to lock up a ton of great gains on less contracts, but with less stress, right? I'll put it this way. I know some of the best trades we've seen in here, it's similar to the example I'm going to give, where maybe you entered at $2 or $3, and within a day or 2, that option is worth $50 or $60, right? You're not going to make it from $2 to $50 or $60 unless you are willing to watch money go away and come back, right? And that becomes harder and harder to do when you aren't locking any wins on the way up. Point being, if let's say you got it for $200, $300, right? it's getting up to 3,000 in value, 4,000 in value. When that happens, a pullback is going to look very painful because it'll hit, let's say, for 4,000. It's going to pull back to 2,500, and then it's going to go up to 3,000, and then it's going to pull back to 2,700, and it's going to wait before it gets back up to 4,000, and you're going to be stressing, shit, I should have locked at 4,000. I only bought this for like $200. The more and more money that starts to add into what you're trading, the more and more stress that you're going to put on yourself. So that's why we try to say, if you got in at $2, lock it at 4, lock it at 6, lock it at 10, lock it here and there, leave paid runners once you feel like, this trade's covered. Even if that paid runner goes to 0, that's my last one that I originally only spent 200 on, and I've already locked 600-700 on this trade. I'm okay if that goes to 0, and I'm leaving it in case it goes to fucking 6,000, whatever. So, yeah, I think that's a good point to kind of break, stop all my preaching. Just check in with you guys, see if this was maybe helpful, if you have any more questions. We're going to have down weeks. We're going to have down days. Hopefully the points that I've tried to cover tonight are going to help us have less and less of those down days, be ready more and more to react, even if things are starting to go against us, to react to the signs around us, to be looking at the opposite side of the trade so that we're ready if it does go against us to hop in. I mean, I can tell you there are times where I'll take, let's say, a call early on the day, and it bounces and it's looking good. Then a key put hits its beast. I enter that put, and we're rejecting on the equity. I enter that put first. Like, I'm not worried about the call I'm in because I'm up on it. I enter the put first because it's just slapping beast and here's my chance. I enter that put first and I'll sit back and wait and see. The put starts to bounce, the call pulls back. I've already probably locked some. There's been times where I'll let that call go to 0, even if it's still green, because I'm in that put, I'm managing that, and it takes off, and I'm just like, well, fuck it, This is now going to be a triple. It's already a quadruple. This is the trade. Even though I was in a call, I locked some up for profit. I left a runner. Now things have changed. I don't care about that runner as much as I care about being in the next move. So I'm going to get in that put. I'm going to start to size that up, get in with the right size, manage that, and let my runner be damned, There are also times where I leave a paid runner that I picked up on Monday, and then by Friday, I'll lock it, and it was never read, and it just kept going up all week, and I didn't think about it because it was a paid runner. It expires on a given day. I'm going to let it play out, right? So, oh, and thank you, Star. I mean, I'm proud of the system. I think it's going to help everybody. We need to, at least remember everything that got us here as traders, all of our, normal management that went into trading before we started enacting this. The system can help a lot, but it's not the be all end all on the market. There are factors constantly that drive these options through their beast, right? 70% of options expire worthless. So all of these things that we're tracking against their beast, 70% is going to give out. We just got to be ready to react every time we get to beast, to be ready to cut if it doesn't work. you know? The last thing I want is to hear folks say it's not working, and then when I start digging into it, it's, well, I got in a put and it was an up day and I just sat there staring at the put all day. Well, I have been there. I can understand that. I totally can relate. But that has little to do with the system. We as traders need to react to the change in trend, to the signs in front of us. And I appreciate the feedback. Um, I'm proud of this system, but I'm not gonna sit here and say this is the most amazing thing all the time and just shove it down your throat. It's like it's gonna prove itself in front of you. So I'm just gonna try to teach you best how to react to it and how to read off of it. Um, oh yeah, let's look for fun at Thursday and the gap down to Beast on the 330s. That's what we never did look at that. That would have been the 25 expiration. Oh no, Goku's going down. Here we go. So yeah, these are the 330 calls on QQQ for Friday. And if we go back, we used to be up at 340, right? These 330 calls used to be way in the money, and for Friday's expiration, right? So these used to be way in the money and have a beast calculated for them that we weren't even watching because they're way in the money and they're worth tons, and we're not going to be playing that. But the sell-off, the gap down, now something that was in the money and worth 14, 15 bucks. Look at this, 14, 15. Falls, rejects, burger bottom, rejects, burger bottom. With the gap down, right at Beast, changes the trend, changes the tone. We have to be ready to react to hit that. And look, right back to 15 bucks for about $1.20. Actually, a little less, $1. So, I think that kind of hits all of the main, group therapy points that I wanted to hit, just to give everybody a little bit of a morale boost and say, we're going to have these down weeks, we're going to have these down days, depending on how we ourselves trade. And, we're in a hard market environment. Basically, just don't be down on yourselves. I had an okay week last week. I did not have a great week last week, and I'm going to be working on little, tweaks here and there so that I can capitalize better moving forward. I guess, do we have any more questions? Or, I can, if you guys want, you can even unmute yourselves. We can chat, have a discussion, whatever. I can kill the video if you don't want to be on it. And yeah, I am working on a playbook to accompany this beast, to kind of help everybody recognize, a beast tap at the beginning of the day carries way more strength than mid to late day reactions. And just stuff like that. Man, this is such a clean, look at this. From beast up, from burger top to bottom, and then keep on moving. Measure the pullback. Yeah, no problem. I definitely don't mind putting in some time for you guys to help out. And I'm always working on something. Um, we'll have the playbook coming out this week, most likely Monday or Tuesday. Just need to finish it up and get enough, good examples in there. And then there are some improvements to the beast system that I've been working on in the wings. You will start to hear some murmurs of that, most likely coming this week. I'll even kind of give you a little teaser, maybe. I'm starting to put some parameters around what identifies good targets on beast options. So now I have a new column that kind of puts a little target next to it. As you can see, right now it's slightly out of the money on most of these. So those will be kind of the contracts that I'll be watching moving into the week to keep an eye out on things, for instance, on Apple. And as the week progresses, these targets will shift in, closer, move around. But it's in an attempt to start to filter down all of these strikes to ones that have maybe a little more chance to get going. For instance, this exact example we're looking at, you'll notice the burger was resistance, held it down, then we stepped down. Burger's resistance, held it down, step down, step down. You'll find when we interact with beast in reverse, sometimes this burger bottom overlaps the burger, or the beast, sorry. When they overlap, it can provide some extra strength for that reversal to occur. So that target has a little bit of, well, hey, if this burger bottom is starting to overlap, let's call it a target, right? So there are going to be little tweaks and improvements on Beast that will be coming out after vetting and testing. That should help us narrow down our focus to say, oh, now these strikes today fit the bill, you know? And it usually can only be one day, and then it's off and running, right? So just one little tweak to help us identify some of that a little earlier and help us sift through, at least for me, I'm looking at like 200 strikes so that I can get all the PTs out to all you guys on the different names. So sometimes I can use a little help narrowing down that focus. So I'm trying to build that into some automation, some calculation. So yeah, some things to look forward to for sure. Yeah, Herb, those are awesome examples. Thank you for sharing. And as always, thank you for your notes. I know everybody appreciates it. Ooh, futures are open. Uh-oh. Gap down. Damn. I was really hoping we didn't gap down. Because, at least I was looking at some things that would have made puts a good option at open on Monday. It looks like they were the option to swing, and we'll open down. Oh well. How far into the future will Burger or Beast reach? When does it form? Yeah, Burger and Beast will start forming. Here, let's just go look at a call. for this week. Copy that. Come back over. So, for this call option that I just randomly grabbed, we have our beast, we have our burger. If we drag it to the right, we can see tomorrow's burger. We can't see tomorrow's beast. It's going to be the same. I mean, they only move by pennies. So we know that the beast stone will be here tomorrow. We know the burger will be here. So you can look forward one day to see where the at least the burger is going to shift to. The beast will pretty much be the same. But for instance, if we went back to that those calls that gapped down on the sell-off and hit beast, if we were looking into the next day and saw, oh, well, you know, I've already covered it. The beast would have been about the same, the burger up above, so blah, blah, blah. Yeah, I saw that, Marlon, that blip of news, so I'm not surprised for the gap down, but also looking at options, I'm not surprised for the gap down. Let's see if it'll... Is SPY open yet? Let's see, is SPY open yet? ES is open and we're down. SPY is not open yet. Ha. Very good. So, here's a fun little example. As I was looking around and doing some prep last night and working on this target thing, I said, oh, look at this. All of these puts, damn near up to at the money, have targets on them. Puts could be very interesting on Monday unless we gap down. And now we're going to gap down. Meaning that the play might have already started. Like all of the puts became targets for today, and we're getting near beast, so they bought them, and now we're going to gap down, so the play is already going to happen. But we'll see. We might fight our way back up, and it's still viable for tomorrow. But again, just like I said earlier, on any tool I make, I have to make sure I'm not introducing bias. So I'm going to test this out and track it for a little while, but you know, if it proves out theory-wise, it should help us a lot. On forward projection, if we set our chart to a week, would it give more days, or would we need a new indicator to do that? I'm not sure I know what you mean. On any chart, you can drag into the future to see, you know, but indicators themselves won't plot past the next day, depending on what the indicator is. And most indicators cut off on today. Yep, I'm right there with you, Herb. Oh, yeah, and another nice thing to cover. I only know because Star just sent me a question. I don't know if you're still here, Star. She mentioned sometimes it could be a pain to go find the beast numbers and get them pulled up, and input into the tools and everything. We have this app that we have been testing, um, beta testing to make sure everything works properly and it adds value and everything. I think we're pretty much ready to go to release the app to everybody. I think it should help all of you to find, to track the beast numbers, the PTs, everything. It even allows you to go in and favorite your strikes so that you can have a narrowed down list, that kind of thing. So it might actually help in that regard. And yeah, I've decided after some thinking over the weekend, I'm gonna update that every afternoon right after close. I'll be updating like it was before the market got all wacky, and I said, let's see where these gaps take us. I'm just gonna update everything at close so that everybody's ready and can do their prep and yada yada. And then if we have gaps, all it means is I add strikes in, um, and then we should be good to go. So moving forward, that'll all the data will be output right after close, just like it has been, up until the last week or so. Oh yeah, and when the app goes live, you can favorite strikes, and they become favorites on a group list, so that they're favorites for that everyone can see. So if everybody goes in and kind of picks their favorite strikes, it will tally them up, and then there's a histogram in the app that shows us like what strike got the most votes and is kind of the group favorite on the day. So it could even be another way that we all help each other vet all of the potential trades on the day and say, these are the ones I'm watching the most. If everyone does that, then we'll kind of have the SPY 440 is the top pick instead of the 442, that kind of thing, or whatever. Yeah, I think the app is ready to go. Basically, I just have to, just like I set it up for the users that are testing it, just get everybody's emails loaded in there and everything to make sure that we're ready, then send everybody invites. And yeah, in my opinion, it's a much more effective and easy way to distribute the PTs to everybody. So in a way, it could completely negate the PT channels, and we just use the app. And yes, the app, there's a PC web version, and there is a mobile version for your phone or your tablet. So you can put it on any device. Pretty much the only drawback with the app is when you land in the app and you're looking at all the strikes, everything is static. I do update it every 10 seconds, but for you to see the update, you have to refresh. So um, yeah, so the only drawback on the app is like as you are using it and you say, oh, I want to go see, what's at Beast right now, because there is a whole filtered tab that is what's currently at Beast. You'll have to hit refresh just so it can pull the most recent price and make sure that it's fresh. If you just leave it sitting, it will be static. So if you come back an hour later, the numbers won't change. You just have to hit refresh. It only takes about 5 seconds, and then all the numbers are updated. It's the only drawback from this app, and I'm going to reach out to them soon and be like, what's it take for this to just be live? How much do I gotta pay? But that's a good one, Mike C. I don't know. We got a pretty good beta group together to test it. I feel like I covered the spectrum there. I kid, I kid. But no, yeah, thank you, Herb. There's a little snapshot of the mobile version. It does a good job of I've programmed it to highlight the prices compared to what the current price is. So, for instance, in that screenshot that Herb just shared, some of those Amazon calls, you have green shading near the beast. That's to tell you that price is currently near these numbers, and it's green because it's the beast. So here's where we buy. On the Google options, you see some are red. That's because current price is below beast, where we don't buy. And then on some of the Google options, you'll see that they're highlighted in purple over on the take profits. That's where the current price is, and they are, and so it's highlighting there to show you, hey, you're near this take profit. If you're ready to take profit, here's the number. So, as the day goes on, if you entered something at Beast when it was green, and as the day goes on and you're refreshing, you should see the colors move from left to right as it is a good trade, and if it falls below Beast, it'll turn red. So it's also a nice thing to have, if you're out on the go and you're looking in on your trade, on your normal trade app, you can pull this up right next to it and reference what the beast is. Yep, I will sign a note so that your wife allows you to get a new mega screen phone so you can. Because it does have like tablet mode on the mobile. Like if you're on a tablet, it fills up the screen real nice, And yeah, and thanks, Marlon. Yeah, for anybody on the mobile, you don't have to hit the refresh button. If you drag down, it will refresh, and it's actually a few seconds quicker. Or maybe it's fractions of a second. To me, it feels like seconds quicker when you do the drag on mobile versus hitting the. Because it doesn't have to reload the entire app, it just reloads the list you're looking at. Yeah, Marlon, great point. Hey, we're already catching that bounce on futures. Since you guys are here, on ES, I marked these key zones, and they were the bottom of the sell-off from back in January, right? And now we're back at them. So, not surprised to see us gap down and hold this, and now we'll push our way back to these zones. These are going to be the key zones for the week. Now that we are back to them, and we have the daily mean just right above. So can we push through these key zones, or do they become rejection? Can we hit the daily mean, and do we reject it to head back down? So yeah, let me go ahead and end the video there because it's about 2 hours long. I'm sorry, I did not mean to go that long. But you know me, once I get going, I just rattle it all off. So let me end the video here. Thanks everybody for tuning in, and for any of you that are watching this after the fact, we'll see you on the battlefield tomorrow.